Technical analysis in the Forex market. Technical analysis is a set of tools for predicting likely price changes based on patterns of price changes in the past under similar circumstances. Technical analysis is based on the theory that markets are chaotic and no one knows exactly what will happen next, but at the same time, price movements are not completely random. History of technical analysis. The prerequisites for the emergence of technical analysis were the observation of price changes in financial markets over the centuries. The oldest tool in the arsenal of technical analysis is the Kaizen method, developed by Japanese rice traders in the 18th and 19th centuries. In the world it is known as Japanese candles. At the end of the 19th century, the American journalist Charles Dow published a series of articles on the securities markets that formed the basis of the Dow theory and served as the beginning of the rapid development of technical analysis methods at the beginning of the 20th century. There are three basic assumptions at the heart of technical analysis. The price takes everything into account. Price movement is subject to trends. History continues. The price takes everything into account. According to this theory, all information that affects the price of a product is already taken into account in the price itself and in volume of trading, and there is no need to separately study the relation of the price on political, economic and other factors. Price movement depends on trends. When demand exceeds supply, an uptrend occurs. If supply exceeds demand, a downward trend occurs. When demand and supply balance each other, a horizontal trend occurs. History repeats itself. Market participants in similar circumstances behave in the same way, forming similar dynamics of price changes since they are based on the same human psychology. The mathematical theory of chaos proves that in a state or chaos, there are certain patterns that tend to repeat themselves. Using information from chart analysis, you can to identify the moments for the best entry and exit from the position, to recognize and foresee in time when there will be a trend reversal or its continuation. To conduct technical analysis in the Forex market, traders must understand and use concepts such as trend, channel, support level, resistance level. In modern trading platforms for chart and technical analysis, a trader is assisted by thousands of indicators and tools for finding various chart patterns. A well-executed technical analysis can certainly increase your profits as a trader, but it is important to understand that no technical indicator is perfect. None of them gives signals that are always 100% accurate. To summarize, the main purpose of technical analysis is to predict the price behavior in the future by analyzing the charts.